Yeah, I think you have to be very selective. I think if you're looking at the property sector, most of the metals that are directly linked to the property sector, I think it's going to have a tough time in the short term. I think the next 3 to 6 months, there's going to be, I think, irrespective of what happens with Evergrande, I think the overall development, property development sector will see a lot more regulation and things will come off the heat. And without that, you don't get the speculation in these commodities. So those iron ore, the standard ones that you pitch as your buildings construction cycle, that'll slow down and it'll have an uncertain outlook in the short term. But if you look at the other thematics where you're looking at EV, those kind of things, I think they will hold up relatively better. But it's a sentiment. At the end of the day, China is going to downgrade growth outlook over the next 3 to 6 months. I think the market is beginning to wake up to that. They are a dominant player in almost all commodities. So when you look at the biggest gorilla in town doing less, it's going to have an effect on the market. And where the markets are, we're pricing in very high growth rates being maintained for a very long time. So any kind of downgrades is going to weigh on the commodity prices. And I think inevitably that's going to come through to Australia because we're a commodity country. And I think that pressures will hit our markets and our currency. So I expect Aussie dollar to keep devaluating over the short term, and it'll put real pressure on our markets.
Okay, so which metal are you liking at the moment? In fact, I'm going to point you in that direction of gold. I know you've spoken about this before. Of course, over the past month, certainly at the beginning of the year, we've been talking about the prospect of rising inflation. There was the assumption that gold would be rising as a result of this as the natural hedge, but we haven't seen that materialise. So at what point will it?
Yeah, look, that's an interesting question. And this is the problem when you have a manipulated macro environment. You get conflicting signals and things don't actually move as you would expect to the historical correlation. Gold should be doing better. And interestingly, over the last week, when real macro threat has hit the market with what's happening in China, debt ceiling problems in the US, tapering risk, all of these things happen, gold has actually gone up, and it's the only thing that's going up at this point. So inevitably, I think the market, when the real pressure comes to them, the real test comes in and investors are jumping on gold. So I think that's a pretty interesting thematic because we have had conflicting signals for a while. And when we actually get correlated moves, the one that's going up is gold, and that's under pressure. The other good thing for Aussie gold miners is you've got declining Aussie dollar. So if you look at the Aussie dollar spot gold price, it's actually, I think, 22,450 odd. And that's doing pretty well. And that's on an uptrend. So even if gold doesn't move higher, a declining Aussie dollar will continue to increase their margin. So Aussie gold miners look pretty interesting in a value territory at the moment, and their margins are expanding on a daily basis.